What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here's DWAC, Digital World Acquisition Corp, or True Social. This finishes at $29.45 today. That is up 20.11%. So we haven't talked about this stock in a while. Last time we talked about it, this was around 50 bucks and has since pulled back pretty significantly to around 20. But today, this had huge price action, made top 10 on StockTwits. Believe it had about 3,000 mentions. So once again, we're going to analyze it. So there was a reason as to why this stock went mooning today. The Elon Musk Twitter deal is getting canceled. So at first, when the deal was announced, Twitter went mooning, DWAC tanked, and now the deal is canceled. So Twitter is tanking and DWAC is mooning again. So no company specific news, but bearish news for their competitor is bullish for this company. And considering how bad the market was today, everything was a bloodbath. The stock did really, really well today. All right, let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. Bottom of the cup being 21.55, and there can be multiple possible tops. It can be 46.45, 53.45, 74.60, or 102. And longer term, this is part of an even bigger cup and handle where this has the potential to go back up to the high of 175. So those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. Although I do think the most realistic top would be 46.45. And then we do have a double gap down. First gap down is back here at $59. So that is a bullish indicator. That is telling us that the stock should come back up to $59 to fill this gap. And second gap down is back here at $42. So another bullish indicator that is telling us that the stock should come back up to $42 to fill this gap. And down here on the MACD, the moving average convergence divergence, the MACD line has crossed the signal line. So that is a bullish indicator that is telling us that it may be time to buy. And then we do have a double gap up. We have a gap up created today at $25. So that's a bearish indicator that is telling us that the stock should come back down to $25 to fill this gap. And that should happen in the short term. And then we have a gap up way back in the beginning when this first IPO'd back at $10. So another bearish indicator that is telling us that the stock may come back down to $10 to fill that gap. And that does seem pretty unlikely at this point, but it is possible, so be aware of that, guys. And in the aftermarket here, this is pulling back down to 29.10. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. In here, we do have a symmetrical triangle forming. Right now, this is consolidating between 34 and 22. So there's a bit more consolidation to go, but this should consolidate somewhere around 28. And from there, it should break out either way, to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of $30 and $28.15. So if this goes to the upside, next levels of resistance would be $30, $33.25, $35.70, $37.65, $39.60, $40.90, $42.70, $44.70, $46.45, $48.45, $49.85, and then $51.15. There is resistance above $51.15, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be $28.15, $27.05, $25.45, $24.50, $23.40, $21.55, $16.50, $12.75, $10.65, and then the low of $9.85. So right now at the current price, $29.45, the channels to the upside are pretty wide, so expect significant price action if this continues to run to the upside, up until this hits $35.70. Once this hits $35.70, the channels start to narrow, so expect a significant decrease in price action if/when this breaks $35.70. And to the downside, the channels are regular sized, so expect a regular amount of price action if this continues to run to the downside. However, if/when this breaks $21.55, the channel starts to open up and get wider. So expect a significant increase in price action if/when this breaks $21.55. RSI is currently at 47, pretty average there, a little bit below average. So according to the RSI, the current price of $29.45 is around fair market value. Maybe should be a little bit higher. But on Friday, this was oversold and undervalued. And this did 11 million in volume today. Pretty significant volume, so this pump today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So what I'm going to say here is just based on the technicals, because fundamentally, I don't really like this stock. I don't think the platform itself is that great, and they have a lot of legal troubles going on right now, so I'm pretty skeptical on the fundamental side. But technically, it does look pretty good. Looks very bullish in the long term. Again, we have strong bullish indicators in the cup and handle and double gap down. However, in the short term, I do think this will pull back a little bit to fill the gaps. Those gap ups are pretty scary. And again, we have neutral indicators in the symmetrical triangle and the RSI. So I'm going to say in the short and long terms, it looks bullish, but in the immediate short term, I think this is due for some pullback. So therefore, if you want to go long, not financial advice, the current price of $29.45 is a pretty decent entry. Very average entry here. Again, according to the RSI, this is around fair market value. So not a bad entry at all. That being said, again, there was a gap up created today at $25. That is likely going to fill in the short term. So the current price $29.45 is a decent entry already, but if you're a little patient here, you should be able to get this back at $25 and possibly even lower. So I don't like the entry of $29.45. I would set the buy orders to $25 where the gap is, and I think that'd be an excellent entry. And again, there is a gap at $10, but that's pretty unlikely that's going to fill. So I wouldn't worry about that too much unless this breaks $21.55. Very critical support there. So again, this should eventually come back up to $59 to fill the gap there. So from $25 up to $59, that would be about a 140% upside potential. So I would say going long at $25 would be a medium risk, very high reward play. Definitely worth the shot in my opinion. I say medium risk because, again, this may come back down to $10, but seems pretty unlikely. And I say very high reward because there is huge upside potential here in the longer term. So I can't support going long at $25, and if it pulls back, then you can just average down at the supports that I mentioned before. So yeah, going long at $25 and holding for the long term appears to be an excellent play to me. Now, if you want to go short, not financial advice, it's actually a pretty decent play. Not terrible, but not great. There is a decent amount of downside potential here. Again, this should come back down to $25 to fill the gap there, and from the current price of $29.45, that would be about a 15% downside. So that is some pretty decent downside potential there. However, at the same time, this may come back up to $42 to fill the gap there in the short term, which would be over a 40% upside potential. So I would say going short here would be a high risk, medium reward play. It is a bit risky, but I do think you should be able to make 15% here on the downside, as long as you're able to withstand some upside pressure. And I would say cover at $25 where the gap is. So personally, I'd probably stay away from this on the short side. A little too risky for my liking, but it should pay off. But there are definitely way better short plays out there in the market. So if you want to go short, please do that at your own risk. So pretty straightforward, guys. The stock is pumping today because of the Twitter deal falling through. Very bullish news. So technically, the stock does look pretty bullish in the short and long terms. But in the very short term, I do think this is due for some pullback. So if you want to go long, the current price, $29.45, isn't a bad entry. But if you're a little patient, you should be able to get this back at $25 where the gap is. And I think that'd be an excellent entry. Not too much downside risk and a lot of upside potential in the long term. And if you want to go short, it is a bit risky, but you should be able to make about 15% to the downside here, as long as you're able to withstand some upside pressure. So I can't support going short at the current price, $29.45, and I would cover at $25 where the gap is. But again, it is a bit risky, and there are definitely better short plays out there in the market, so it may be a better idea just to pass on this one on the short side. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is DWAC, Digital World Acquisition Corp, or Truth Social. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.